All right, let's get to Bloomberg's equities reporter, Stephanie Hughes. She joins us now to talk some more about what's been going on with Cargojet. So shares spiking today after Q1 results. What led the company to a beat?
Sure thing, Marilla. So there's a few things going on for Cargojet today, and it was mostly the domestic revenues. But let me talk about that stock price move. It was a big one. Like you mentioned, shares moved by over 15%. That was its biggest intraday gain since August 2020, so nearly 5 years since we saw a move of that magnitude for the company. It was also by far the biggest TSX performer today. And that was because of the first quarter adjusted earnings beat by a wide margin, by 60 cents, in fact. It's not a small, modest beat there. And this beat came despite anxieties around the tariff impact of the trade wars impacting the macroeconomic picture, which management says it will be able to navigate. So it was really interesting what came out of management today. Cargojet co-CEO Jamie Porteous said that trade wars with the U.S. Tend to decouple the North American supply chain that we've been reliant on in the past decades or past few decades. So this means for the company that more cargo will come directly to Canada from the rest of the world, and that will help the company mitigate some of this tariff exposure there. So the results got a fairly decent reaction from the analyst community. I'll point out the reaction from TD Cowen's Tim James, who said that because Cargojet could potentially benefit from the disrupted trade flows, this demonstrates the company's resilient business model. So this has been an encouraging sign for a company that tends to be quite exposed to tariffs and trade wars and acts as a sort of barometer for economic health in general, Marilla.
Okay, so that's good to know. Let's move on to the other in the red section of the stock exchange, Aecon, down today, reporting a loss, and I'm just wondering what led them to that loss.
Yes, so from the best performer to the worst performer, Aecon Group, those shares fell by over 12% at its lowest point. That was hitting an 8-month low for the stock price. And that's because the firm it reported an adjusted EBITDA that fell short of what analysts were expecting, and the profit also dipped by quite a bit. It also reported higher operating losses from 3 of its joint venture projects. So TD Cowen analysts said that while Aecon's revenue growth has been quite impressive lately, it had a few back-to-back quarters of charges tied to these joint ventures that are really making it more difficult for investors to see more upside to the stock, and they're really going to be focusing on the risks. So it's tough for shareholders in the company to see past those risks to any kind of light at the end of the tunnel there. So Aecon has been struggling alongside other companies amid these trade wars, amid tariff talks, and the share price is actually down by 42% year to date. So it's been having a rough go of things since we've been bombarded with headlines around tariffs and trade wars, Marilla.
Okay, we will leave it there. We have Stephanie Hughes, Bloomberg's equities reporter. Thanks for that.